At the end of quarter three, I remember you telling us that you will still do well in quarter four. The quarters ahead, because of how the world economy is behaving, are sketchy. Now, love to understand what went in quarter four first, because you've shown significant margin improvement, defense orders, so on and so forth. And what are the takeaways from that, therefore, for the year for FY25?
So first off, maybe I should say that perhaps we were being a little more cautious than we should have, because that was when the Red Sea crisis was really precipitating, and we didn't know which way that would go. Thank God things have turned out far better for the global economy. Few of the things that have really worked for us is, we've had a strong performance on our standalone basis. We've had an extremely strong performance in our defense business, where this business is starting to take off. Our industrial castings business has grown 2 years at 30% CAGR, and we expect this to continue growing. And as we've said, in less than 4 years, we should double this or more than double this business. Defense also is doing very well. We have a large order book that we have secured, something to the tune of 5,200 crores. This is both for existing business, existing products, new products, existing customers, new customers, and this is all majorly exports to be completed in the next 3 to 4 years, some in 3, some in 4. So that gives us a steady business, and this does not include the Indian orders of products such as ATAGs, etc., that are yet to fructify, which should happen shortly after the elections. Additionally, on the industrial sectors also, we've made a breakthrough in 2 new sunrise sectors, and we believe both these sectors are very promising. They are very technologically intensive and very differentiated, and these should give us good growth opportunities. Our aerospace business is starting to really show growth opportunity. Really show growth, and we expect that in the next 2 years this will also double, and at very good profit numbers. And lastly, our overseas subsidiaries, which we have been putting a lot of focus on. In fact, we have a board member, executive director, who's really owning that responsibility and really putting in the hard work to make that happen. And I'm happy to say that the results are showing, and that the European business will be profitable for the full year, the aluminum business for 25, and the US business will be profitable in Q4 for sure, both at a EBITDA and a PBT level. And same thing with Europe. The European business will be profitable for the full year. We are turning the corner, and this business is both growing in size and increasing in EBITDA margins as well. And on a consolidated overseas business, we will have a double-digit EBITDA margin in 25.
I was just looking at some of the statements you made as well, and what really caught my eyes when you talk about what changed from previous quarter's view. You say maybe you were a little too cautious, but on the other side, you also say there was a tremendous order flow from business moving to India from China and Europe. And
Yes.
I found that very interesting. Can you elaborate on that? Because is that a trend which is still on? We talked last time about the China plus one kind of a piece moving forward for Bharat Forge. Is that fructifying? Can you give us a sense there?
Yeah, clearly the China plus one is only just starting, Tamanna, for India. I think the next 3 to 5 years will see tremendous opportunities. But these are opportunities that will be encashed by companies which have significant technology, ability to deliver with capex, with differentiated technology platforms, and with ability to move from components into sub-assemblies and products as well.
Okay.
Because there's going to be a migration of manufacturing from Europe into India, and European customers migrating their sourcing from China into places like India, because India is offering 3 things. They're offering a conducive environment, they're offering growth, and they're offering a cost competitive manufacturing location.
I'm just wondering, when you're saying that the China Plus One has just begun, right now there is talk of a Chinese resurgence, a Chinese economic resurgence. Does that skew that view at all? Or is that a sort of a challenge or a headwind to that view?
No, no, not at all. See, a Chinese resurgence is good for Chinese companies because then it doesn't make them so reliant on exports. But it's very clear that the US and Europe have made a conscious decision that they have to have a balanced sourcing between China and the rest of the world. And in fact, the US is moving away from China as far as sourcing is concerned, very consciously.
Just wanted to get a sense of the defense piece for Bharat Forge. You had earlier said that revenue will be about 2,500 crores in the next couple of years. Do you see that on track? Do you see things picking up post-elections?
So we are, I'm convinced we are on track for that. In fact, our reliance on only India for the defense business is now reducing because we're having an opportunity to be a global company. We're pursuing that very aggressively. And I think that our products, we have a wide variety of products which will serve many different customers. And because we own all the technology ourselves, we can configure products which can be unique to each market and make them competitive. So I think that's a big advantage, and that's one of the big advantages that our customers globally see, that here's someone who has the engineering and the manufacturing capability, including the entire value chain under one umbrella, right from steel to all the forged components, the mechatronics, the embedded systems, controls, assembly capability, and at large scale with high volume, fully vertically integrated, so that gives them a speedy recovery, speedy service, and the flexibility to get products customized as well.